Today, we will speak about a topic that has gained quite some attention during the last 2 years, and that today, in the light of COVID-19, has gained a lot of practical relevance. I would kindly ask you to close your eyes for a moment and try to imagine what would happen if a payment under a contingent instrument would not occur against physical documents, but against the presentation of data. To some, this may sound scary, because some jobs may be involved. To others, it may sound quite disruptive, and some others may think that finally traditional trade finance is heading towards the future, which is just around the corner. There have been many blockchain consortia out there that try to make this vision real. Marco Polo is one of them. It is the fastest growing blockchain-based trade finance network and the one that has, at least in my view, the most holistic approach to this topic. Marco Polo, in my view, has the potential to disrupt the way we have been doing trade finance during the last century. It is data-based and offers an end-to-end transactional workflow that will allow both banks and corporates to do trade finance cost efficiently and with less manual effort. Today's webinar will be dedicated to explaining you the value proposition of Marco Polo. Now, I would like to introduce to you today's speakers. And Otari, I would kindly ask you to switch to the next slide. Thanks. Similar to last time, nobody of us is seeing each other, but we have become friends throughout the last year where we have been working together, so we know each other quite well. First of all, I would like to introduce to you Otari. Otari Megali is account executive at TraderX, covering Germany, Austria, and Switzerland, as well as Eastern Europe. TraderX is the fintech vendor, so the brain, so to say, that stands behind Marco Polo Consortium. And Otari will be the main point of contact for all of you who are interested in learning more about Marco Polo and potentially to do also a trial jointly with RBI. Before joining TraderX, Otari worked for a supply chain finance platform, and he actually experienced all of the problems that we will be discussing today firsthand. Then I have Ationa Bogo for you. She's sales engineer at TraderX, and she has a technical background and is in charge of onboarding early adopters to the Marco Polo platform. Earlier, she has led blockchain business development activities at SAP, helping corporates in various industries to reimagine cross-company business processes. Myself, I'm Martina Zimmel. I'm heading Trade Finance Department of RBI since 5 years now. My background is actually relationship management on the corporate side. So I know what actually corporates want with respect to risk mitigation, but I also know what kind of customers experience and seamless integration into, for instance, ERP systems the head of treasuries expects from banks nowadays. RBI is a member of the Marco Polo Consortium since more than a year now, and I will leave the floor mostly to Otari and Ationa to lead you through the presentation, but I will jump in here and there in order to give you also the banking view during the presentation. So I really hope that the presentation will be quite dynamic because you will have the Marco Polo view joined by the banking view and also our experience that we have gained throughout the last year. In case you have questions during the webinar, I would kindly ask you to use the Q&A functionality that you see in Zoom. We will answer all your questions that you may have after the webinar. So I would kindly ask Otari and Ationa to take over and to guide you, guide us through their presentation.
Yes. Hello, this is Otari speaking. I hope everybody can hear me fine. Martina, thanks a lot for the warm welcome and for the nice intro. As a matter of fact, we have prepared for you today an intro into Marco Polo. So I'm going to show you now a quick agenda that we are gonna do today. So first, we would like to set the scene before diving into solution and talk about the typical trade finance some of you probably are experiencing today, and then what we think is our solution in Marco Polo. We will also talk about our product roadmap, about the different solutions we're going to offer. And then we're going to do one quick deep dive into one very exciting solution called payment commitment, which was very promising, especially for nowadays with the COVID crisis. So stay tuned until the second half to get the full insights into payment commitment. And then we're going to do at the end a quick Q&A where we hope we can answer all of your questions and propose some follow-up and next steps. So before I would like to talk about Marco Polo, just in general, I would like to make a couple of points on how trade looks like today, what are our typical problems, what are our challenges, and what are we actually trying to solve. I think it's very important to remember, and I think that is a very astonishing figure, is that about 80% of international trade today is using some sort of trade finance solution. But despite this enormous importance for international trade, trade finance today is often quite complex and very inefficient. And one of the reasons why trade finance is not as efficient as we hope it to be is just the sheer amount of participants in a typical trade. So in a typical export scenario where maybe goods are sent from Austria to China, about 50 different parties will be involved. We have displayed some of them here. So you will see many parties are involved, like exporters, exporter bank, document carriers, insurers, custom agencies, importers, shippers. And all of these participants, looking at a typical export scenario, need to exchange assets, data, or documents at some point in the life cycle of the export transactions. Some of the documents that are exchanged are displayed here. So typical documents are invoices, purchase orders, LC documents, KYC documents, bill of lading. Everybody in trade involved probably recognizes this overview. And so it is quite natural that trade is complex because we have so many participants and so many documents that need to be exchanged. What further adds to this complexity is just the way these documents are exchanged today. A vast majority of these documents are still paper-based, and they are often exchanged via postal services. And if you need to send them internationally, you probably know this problem that can take many, many days, if not weeks. And that problem becomes even bigger in times of COVID-19, when many postal services are even delayed and people start to work more and more from home. So this exchange documents has become a real problem. And on top of that, paper documents often get lost. They are also quite vulnerable to fraud. But even if these documents are received by recipients, they often need to be manually checked and archived. And even if you scan a document and send it via email, all you have really done is speeding up the process of sending that document, but the recipient still needs to manually check those and then archive the email instead of the paper document. And obviously, all of these participants, all 50 of them, at the end of the day, will input their view of the transaction into their internal systems. And obviously, errors can happen there as well. So at the end of the day, no party can be really sure that they have the same understanding and the same knowledge about the transactions as their counterparty has. So there is no single source of truth, what we sometimes call it. And if you spot a mistake and a misalignment or something has happened or you want to reverse something, that whole process starts again. The big problem that all parties have is, you probably realize, is one big question is, how can we actually efficiently share data and assets with many participants in the trade ecosystem, and how can we automate processes? And the question really I often ask myself is this a real problem, right? Am I making this up, or is this a problem we should even care to solve? And the answer is yes, because these problems with the data exchange inject a lot of costs and risk into the whole trade finance ecosystems. And the reason and the result for that with that is that many trade finance products cannot be offered to smaller corporates or to corporates in emerging markets. Just one more number before I jump into the next slide is the ICC in 2019 estimated that there is a trade finance funding gap of about $2 trillion worldwide. And these inefficiencies were one big reason for that. And that was 2019 with no crisis like COVID and an world economy that was quite stable. And in 2020, the ICC estimates that the impact of COVID-19 will be far, far bigger than the financial crisis. So efficient trade finance will be essential for many, many businesses to keep alive and to pull through these next 2 or 3 difficult years. I guess what's clear from this slide is, just to wrap this up, is yes, A, there is a big problem in trade finance and how we do business today. B, the problem is actually big enough and should be on the agenda of everybody involved in trade. And C, these are structural issues. These are issues that concern the whole industry and cannot be solved by one single bank or one single corporate. So you actually have to change a little bit the thinking of the whole industry. And that is actually the reason why we founded Marco Polo in 2017 as an industry-wide initiative that wanted to address these challenges. You see here on the right, our official mandate, what we wanted to do, but I think you can simplify that whole mandate in one simple sentence. We wanted to connect the whole trade finance ecosystem through the Marco Polo Network and offer multiple trade and working capital finance solutions through that very same network. And obviously that is a very compelling vision and has attracted more than 30 financial institutions now, more than 100 corporates, and we are now more than 7 technology providers. If you look at the banks currently part of Marco Polo, you heard that obviously RBI is one of them, and a very good partner because they promote us everywhere they can. But you can also see we have lots of international large banks, like you can see here, BNP, SMBC, MUFG, these are all Japanese banks. We have Bank of America, American banks, İşbank in Turkey, Bradesco in Brazil. So you can see we are bank-wise a truly international initiative. And that is very important because in many trade finance solutions, you actually need the corresponding banks or the counterparty banks from day one. You also see that we have many corporates that are testing and, more importantly, co-developing these solutions with us. So you see here big names like Daimler or BMW, so these household names, or NLMK in Russia, but we also have smaller SME suppliers that are testing and developing together with us. And that is actually a very important piece of Marco Polo, because we want to develop a solution that really fits the needs of our customers. And that's why we want to involve them as soon as possible in that whole process. You can see in the bottom as well that we have many industry leading tech partners and tech providers as part of Marco Polo. You see big names in here, like here Accenture, Microsoft, or MasterCard actually. And the reason for that is any modern network needs strong tech partners from the beginning, because the success of such a network relies also on technological services like cloud service from Microsoft, or onboarding services from Accenture, or payment services for MasterCard. Martina also mentioned the integration into ERP systems. So any modern trade finance solution needs to have that tech part to be a strong part. And I guess what has the impact of COVID-19? I think has impacted the whole industry. But I think if that has done one good for us in that space is that it's not a question anymore if that vision of one network, be it Marco Polo or another network, becomes reality. It's just a question rather when, because the problems are just too big nowadays. So I guess the vision was clear for everybody involved, and everybody is striving towards that vision. I guess the how can we actually achieve that was far more important and far more difficult to figure out. So the first thing we actually had to work was the efficient data exchange. So one of these problems that I mentioned in the first slide. So how can actually we connect the different parties and how can they exchange data very efficiently? And the way we could have done that was what you see here on the left, is through the use of a central platform. The idea of such a central platform is to connect basically all parties of the trade ecosystem and invite them onto a single central platform. And if all the users like buyers and buyer banks and insurers and suppliers, if all of them do their business through that central platform, then you actually have a very good and efficient way of doing business. So this and similar things have been tried in the past to come up with such a centralized trade finance platform. Some of you might know examples like Bolero, or that wants to digitize the bill of lading. Some of you might know SAP Ariba, more in the procurement space, or Prime Revenue for supply chain finance. But all of these attempts failed to really scale globally and became either niche solutions for one specific product or regional solutions for maybe one specific countries, but no one really scaled globally. And the reason for that was the technological design of such a central platform and the business model behind such a central platform. Because if you think of it, a central platform, all of these users essentially have to accept that such a global trade finance platform essentially has total control over international trade, right? So if you have 80% of trade using trade finance and you want to everybody to use it, it's going to become a very powerful platform. And that power comes down to that platform could decide which users are allowed onto the platform. That platform probably could dictate the rules we're going to do business. And more importantly, could see the data of millions of businesses worldwide. And all parties worldwide would have to trust that single platform, that this power is not misused in any way. And I was often thinking myself, is this a realistic scenario that could ever happen? And probably the answer to that is no, because in times of Donald Trump, economic wars, and the rising importance of data security, such a centrally controlled worldwide trade finance platform seems almost impossible to achieve. And that is why, with the rise of new blockchain technologies, this is what you see on the right-hand side, is we now have actually a better way to connect the trade ecosystem and essentially avoid that centrally controlled platform. Blockchain, just in a nutshell, is a technology that allows the various participants to exchange data and assets in a highly secure and private way. And what's important for traders, that data is not shared via a central database, but is shared rather decentrally on a peer-to-peer network. So only parties that need to see the data will ultimately see the data. So you have no central platform that sees everything, knows everything, is all powerful. And one of these examples of such a decentralized system that actually scaled worldwide is the internet. So that's why we sometimes call Marco Polo the Internet of Trade, because we strongly believe that only an open and decentralized network has a true chance of scaling worldwide. And that's what we want, because trade is worldwide. So the efficient data exchange is one important element. And we think blockchain or distributed ledger technology is one critical piece to that puzzle. the next obviously question is, once you have everybody connected, then obviously they need to transact and trade finance. So you need various solutions to offer to all parties if that network would make sense. And here you can see some of the solutions we want to offer in 2020. These are these on the left. And you can also see here on the right, future offerings. What you realize is that in 2020, we are starting with 3 solutions. We call them payment commitment, where we have the deep dive later, receivables discounting or factoring, and payables finance. And you will also find in the future, we have solutions on the backlog for things like pre-shipment finance, asset-based lending, dynamic discounting, guarantees, commodity finance, export finance, and many more solutions.
If I may jump in here, Otari, then I think this is in my view, one of the differentiating factors of Marco Polo, namely that Marco Polo, as opposed to other blockchain-based platforms, that Marco Polo has a product roadmap, and that your approach is to offer multiple products via one solution. And in my view, this is something what corporates are looking for. They don't want to have one solution for guarantees, another one for receivables discounting, and the next one for payables finance. No, in the ideal world, they have one platform that offers a variety of products to them. And these products then may range from the traditional trade finance or contingent instruments like the payment commitment to open account trade finance like payable finance, for instance. And in the ideal world also, these product offerings are directly connected with their ERP systems, their enterprise solutions. And that's why in the beginning I've mentioned that in my view, Marco Polo has the most holistic approach to the offerings to corporate clients.
Martina, that's a very good point to make. That's 100% true. So the multi-product way of doing things will actually be the future. And on top of that, Marco Polo is not just multi-product and multi-solution. We are also multi-participant. So one through Marco Polo for multiple solutions with multiple banks. So that is a very powerful offering, we think. And we just have started in 2020 with these 3 solutions on the left. Why did we choose those 3? Is because we think that there is a high demand for them in the first years, and that obviously will help us to grow the network fast. The first solution, where we also have the deep dive in later, is a solution called payment commitment. Just quickly, payment commitment, you can think of that as a digital alternative to a letter of credit to mitigate non-payment risk. It is completely digital and automated. So if you're a supplier and you want non-payment risk of your buyout covered, then payment commitment would be one of the solutions you want to look at. We have released now the first production grade software, and this is where we hope to test with some of the participants in the call to have a test after the webinar, and obviously also have a trial run. The second solution is receivable discounting, or some people may know that as factoring, where a supplier sells receivables to a bank. This is a very easy and quick way for suppliers to get financing, and probably is a well-known concept by all of you. What's really different here is that with Marco Polo, suppliers will actually be able to set up multiple programs and manage those with their multiple counterparties. So multiple banks are possible through Marco Polo. We are planning to release the software now in a couple of weeks now. So end of June is the target. And we expect for both these first solutions, the first live transactions in July and August.
And I think also here, what is really important for you to understand is that you may have your own factoring solution already, yeah. But what does this mean for a corporate client? It means that he has to do the factoring solution with, for instance, RBI, and then if he wants to set up another program, he does it with another bank, yeah, and then the third bank. And it means that he has to cope with different platforms from different banks, yeah. And what Marco Polo offers here is actually a multi-bank platform, meaning that the client has one platform with whom he can transact with different banks. Yeah, that's the value proposition from a corporate point of view.
Yeah, absolutely.
And sorry, Altari, if I may jump in here, because there might be participants who are also wondering how they can join and whether they need to establish their node. As one of them actually asked in the Q&A section, and I already answered that. So you please reach out to us and then we will guide you through the process. And there is not any confusion at all when it comes to approaching R3 in terms of like provisioning the Corda node, because everything is encapsulated in the Marco Polo offering. So you don't need to actually set up anything separately. We would make it possible for you. But in order for us to give you more details, you please need to reach out to either Altari or myself.
Thanks to both of you. Very valuable comments here. We also have one last solution that I wanted to quickly touch on, and that solution is called Payables Finance. In this solution, a seller can also sell a little bit similar to receivable discounting, a receivable to a bank, but that receivable before gets approved by the buyer, and that's usually a large buyer. So this is a solution most used by buyers who want to support their suppliers and get them access to cheaper funding than they would otherwise without their help in a receivable discounting scheme. So I think if you look at that, what that really shows us, and as a summary, and what Martina also mentioned is, this is what Marco Polo is. A corporate has one platform or one access to the network, and then has multiple solutions that he can choose from and can do those with multiple counterparty banks. So you might do payment commitment with RBI and receivable discounting with BNP, or with 5 banks or just one bank. And that's actually the power, and that's actually where we think this is what the market asks, and this is actually what a modern network looks like.
Yeah, what I would like to add here, because some of you may have thought during us speaking whether Martina now thinks that Marco Polo will be the one and only solution out there in the future. And Altari, sorry to say, but this is not the case. Yeah, I think Marco Polo, there will be still also own factoring solutions, for instance, of the banks. Yeah, but there may be clients like the very large clients, yeah, that just don't want to have a diverse set of factoring solutions with different banks. Yeah, so what we as banks need to cover are multiple channels, yeah, and multiple offerings for our clients, yeah, and that's why I think Marco Polo will be in the future one of these solutions, yeah, for maybe the large corporate clients, yeah, that do not want to have single solutions from banks, yeah, just to make that very clear. And from the bank's point of view, we need to think very carefully what kind of different platforms and optionalities are we offering to the to our corporate clients. And I believe that definitely the Marco Polo solution with the value proposition, namely multi-product and multi-bank, yeah, will be something that will be of value to particularly large corporate clients.
Yes, very good comment here. And actually, that's a very nice segue into the second part of the webinar, where we wanted to do a deeper dive into one of the solutions we have already released and is moving into production. Solution called a payment commitment, because that that is of very special interest at the moment, and we see a lot of demand for that. So what happens today is, and just here, what you see here on the right is if a supplier has basically two options when they want to sell goods to their buyers. The option one is here on the right, and that is sometimes called open account trade. And what that means is a supplier will say, will sell goods to a buyer without any risk mitigation. So they send the goods, raise invoices, send the invoice and other documents directly to the buyer, and then trust that the buyer will pay on due date, right? This is a very fast and simple way of doing business, and a highly used way of doing business, but it's also a very risky one, especially nowadays in the current situation, because if the buyer cannot pay, doesn't want to pay, or pays late, this can become a huge issue for the supplier. So the supplier often wants to have the risk of non-payment or late payment covered. And one of the solutions he might be using or has used in the past is what you see here on the left. And that is actually involving two more banks and having that non-payment risk covered. You probably are all very familiar with letters of credit and documented trade, so I don't have to go into details here, but what you probably all can resonate with are some of the problems and disadvantages of a letter of credit, because this solution can be very slow, can be very complex and costly, because it relies on the processing and manual checking of documents by the banks. And that is, especially nowadays in COVID-19 world, can be a big problem, because sometimes suppliers cannot present their documents in a timely manner, or postal services are delayed. And even when trade picks up again in the second half of 2020, we probably will see huge catch-up effects, and probably banks will be overwhelmed by the sheer amount of paper documents or other documents they need to process. Don't get me wrong, I think letters of credit will still be a very important solution in the years to come, but naturally it has its limitations just because of the way it was designed. And what you need in times of crisis like COVID-19 or in times of huge demand is actually a solution that provides the customer with a similar way of mitigating that non-payment risk, like a letter of credit, but has also the efficiency of the open account trade. And that is actually our solution that we came up with called payment commitment. And what makes payment commitment so different is you still have, like in a letter of credit world, you still have 4 parties involved, but we exchange data rather than documents. And we don't check them manually, we check them automatically, because the software does that for us. So that is a very fast and simple way of coming up with the same risk mitigation that a letter of credit does, but in a very efficient way. So in a way, you can think of that, we're combining the both worlds, the efficiency of an account world and the promise to pay from a letter of credit. One thing I often get asked, and what is a very important question here, is what about the documents, right? Because documents still happen. What about those? So like in an open account world, the documents needed to transfer, like the ownership of the goods or any other bills of lading or certificates, are exchanged directly between buyer and supplier and not changed via the banks. And that whole process between the 4 parties, we only exchange data, and the documents that are still needed only between these 2 parties, that will ultimately speed up the process significantly between all parties. So
and maybe to add here, where does the data come from? Yeah, the data comes either from the supplier directly, or obviously, and we are all bankers, and we know that we look for risk mitigation and also fraud mitigation. Yeah, all the data may also come from a shipper, obviously. Yeah, so from the freight forwarder. Yeah. Irrespective of whether there are still paper documents then flying around, yeah, but the data may be also then be provided by all the parties that somehow also issue the physical documents, yeah. And obviously, in an ideal world, yeah, but we are not yet there. There will be in the future no paper documents anymore flying around, because there is, for instance, a good digital bill of lading solution already available. Yeah, and we all know that there are fintechs like Bolero, for instance, out there that already offer this kind of documents, digital documents.
Yeah, that's actually a very good point, and that is also something where we are going to work with actually partners like Bolero in the future, where we actually also want to have and replace these trade documents as a whole and include them into the payment commitment world. So we hope to be or evolve to a digital version of the letter of credit or something similar in the years to come. But as Martina said, there we need the partnerships with partners like Bolero, or we need the integration with logistics providers. And that is something we're working on in the months and years to come. What is maybe important also to note is, you probably will realize one thing, that for which customer is this relevant, and for which customers might be using payment commitment rather than letter of credit or open account trade. So probably if you're a supplier and you trust your buyer completely that the payments will be done on time and in the exact right amount, then probably open account is unbeatable, because you actually don't need a protection. If you're a supplier and you want the payment risk covered and there is very little trust, and you actually want to have your banks involved and you want them to check the documents. So in this scenario where there's little trust, I would say the letter of credit still remains as a very important solution. But if you're a supplier and there is some trust, like in, for instance, if you've done business before in open account trade, so there's some trust between the buyer and supplier, like in many cases, then payment commitment will be actually far more efficient and a completely digital alternative to a letter of credit. And that is also the reason why I think payment commitment is now implemented by so many banks and so many corporates, because for many there is this level of trust. So, and all a supplier, for instance, wants to do is to have that risk mitigated, and then a digital solution is far more efficient than a paper-based one.
So I see this quite similar to Altari. And we share the view that the documentary letter of credit will be there also in many years to come. Yeah, and I don't think personally that Marco Polo payment commitment will work for an equipment manufacturer. Yeah, I think this, who sells a heavy machine, for instance, to Russia, I don't think that this will work. Yeah, but if it's deliveries that are occurring on a regular basis, yeah, for instance, trade of convenience products or clothing products, yeah, or how to say, supermarket chains, yeah, that buy a lot of goods, yeah. I think for these kind of clients, that the payment commitment, where there's a lot of small transactions behind that, however, still need to be secured, then I think the payment commitment is actually quite a good product, yeah. What we have done, and maybe Altari, you switch directly on the next slide. So as you have seen, the payment commitment is on the verge of getting live, yeah, and being implemented by the first banks. And what we have done in December last year is to make a pilot with between an Austrian and the German client. The Austrian client, a client of Raiffeisen Landesbank Lower Austria, was a distributor of pharmaceutical products, and was buying on a regular basis from Dr. Wolf, who is a large German mid-cap client who is exporting to more than 62 markets, and who wanted to try out this the payment commitment for the first time. And this Dr. Wolf really has exporting to 62 markets, obviously also relationships in markets that are maybe more risky than the Austrian SME here. But what we did is to make this flow as a trial, and made a pilot, and in the end, this data matching, was indeed extremely convenient for both of the clients, because it was just a click of data that was matched, and then the payment commitment became from a contingent instrument effective, and further on, the plan of Marco Polo is that also this effective payment commitment, you will see thereafter, then also can be financed by the banks, So the payment commitment not only is a contingent product, but may also then be the basis for a discounting further on by the respective bank.
Yeah, thanks a lot, Martina. You actually stole my fun. Yes, that is exactly what happened. Here you can actually see a summary of the transaction and the different steps. But as Martina said, and just to speed up the process because we're a little bit running out of time, it was exactly that. So we had a buyer, in this case, SM Pharma, uploading the purchase order data onto the Marco Polo network. Then the supplier, Dr. Wolf, approved that data, and then it became a contingent IPC, so a contingent irrevocable payment undertaking. And the good news for the supplier was that at that time, the supplier knew that there is a promise to pay by the buyer's bank if the outstanding data, like invoice data and shipping data, actually match to that. So he could send the goods with that ease and with that promise to pay beforehand. And then once he had the invoice and logistic data uploaded and that matched between the three different data sets, that contingent IPC actually became an effective IPC. And what the Dr. Wolf then could have done is just wait before the payment is actually then done on due date by RBI, or as Martina said, actually get pre-financing and improve working capital before that, get liquidity before that. Or what is also possible is to have a confirmation by the supplier bank. So then the supplier then has only supplier bank risk and not buyer bank risk anymore. So this is in a nutshell what happens in a typical transaction with 4 different parties. And this is also what we hope to test with everybody after this webinar. So if you're interested, then please reach out. We're running a little bit out of time, but I just want to quickly touch on the business impacts here. So what you've probably seen, and as a summary, is because payment commitment is actually digital and fully automated compared to a manual and paper intensive letter of credit or any other instrument that requires manual intervention, you actually can see that the whole process is extremely speed up. So like a payment commitment transaction can happen in maybe 2 days or even minutes if everybody is online. And that whole process is not, that speed is not possible in a LC transaction or any other trade finance transaction without everybody being on the same network. And also the operational risk. So in many ways, when there is a mistake and then, for instance, there is a mismatch, everybody detects that immediately. So the supplier doesn't send to a bank paper and then doesn't know if these match. They know immediately, and that is a huge benefit for suppliers because they know immediately, did it work? Is there any problem? Is there any mismatch, and can I actually change that, and can I heal this mismatch? What also comes into play is the costs and revenue involved. So we talked a lot in the first slides about the costs and how would everybody benefit from this efficient data exchange, and that is actually what happens. So everybody in this whole trade ecosystem, so all 4 parties, will actually benefit from this more efficient way of doing business. And one last thing I wanted to highlight is what I also hear from many, especially the German corporates and German banks, is that the way they use workforce nowadays in many trade finance departments or treasury departments in corporates are actually sometimes not very efficient. Because if you think of a bank that oftentimes LC transactions or any other transactions require on-site handling of physical documents. And that was, especially in COVID-19, a big challenge. And payment transactions actually can be approved and initiated from anywhere. So you provide your workforce with a tool to work remotely and don't rely on working from the office. And also what we heard a lot of times is document checking stuff. So it's not an easy task to train somebody on document. This is a very training intensive labor. And often these departments are getting older and older because no young people want to do this anymore. So we think it's actually time now for the banks and for the corporates to get away from this manual checking of documents and intensive training, and more to an automated and digital way. And
yeah, maybe let me add, I think what is difficult for banks and is to keep young talent. Yeah, we, at least speaking from my side, we have sufficient people that start, yeah, but then very often they want to move on within the bank, yeah. And I think this combination, yeah, of somehow combining the traditional trade finance with digital trade finance, yeah, will also offer us the opportunity to keep young talents, yeah, because in my view, the future is both. Yeah, you will not be able to only focus on one side. You will have to be able to offer everything to the clients, yeah, and some of the clients will remain with the traditional trade finance, but others want to head into this new era. Altari, I would suggest that we skip the business impact for corporates, yeah, because it's quite similar actually. It's the reverse of on the banking side, but that we go directly into the system, because that was also on the agenda, right?
Yes, 100%. So I'll hand over now to Tiona. And just looking at the time, we probably need to keep this below 5 minutes, this whole quick demonstration, because we also want to answer some of your questions that you might have in the Q&A. So I hand over to Tiona.
Okay, fine. Can everyone hear me fine?
Yes.
Okay, perfect. So just before I, and I think I can already share the screen, but I'll be using this slide from you, Altari. So before I jump into the live system, so what you will see is 4 different systems, namely a buyer, a supplier, the buyer's bank, and also the supplier's bank. They have their own dedicated Marco Polo instances. Those are not running on a single server on the backend. Those are totally decentralized, and each of these systems has a corresponding Corda node at the backend. And I, of course, recognize that it will be a little bit hard for me to show the entire flow right now, but I want to highlight maybe some of the coolest functionalities, and like what Altari already explained before with the flow of payment commitments. I'll just go ahead and share my screen. Can you maybe stop sharing, Altari?
Yes.
So as you can imagine, the flow starts really with the supplier uploading, with the buyer uploading purchase orders in the platform. So let me maybe quickly illustrate that. So right now I'm logged in as the buyer, North buyer, and this buyer has the opportunity to upload purchase orders via the platform. Of course, this is now done manually here, and I have already loaded some purchase orders in the platform here, but the idea is that there will be a full integration. We're working around the clock to integrate with ERP systems such as SAP, Oracle, NetSuite, and Microsoft Dynamics as well, and also other smaller ERP systems that the corporate might be using. Upon the upload of a purchase order, the supplier, of course, needs to say that they are fine with that purchase order and that they can deliver the goods which are described in there. Afterwards, there is an intermediate IPU checking process done by both banks. So being logged in as one of the banks, so for example, the West suppliers banks, they are the bank of the supplier, or the buyer's bank, they can perform the contingent IPU checks. This is just an intermediary step and allows the banks to actually take a look at the data, how the data looks like, and give some guarantee that yes, in the eventual shipment of the goods, the supplier will be paid should the data be matching. And then what happens is that the supplier needs to upload invoice and logistics data. Of course, we also allow LSP providers, logistics service provider companies to enter logistics related data via API. So that is also perfectly possible, but I will just to highlight, you know, the capabilities. Maybe what I will do right now is to show to you an invoice that I uploaded a few minutes ago. And this invoice, you can see that there is a three-way match across the three different assets, like PO, invoice, and logistics data. And the supplier can see immediately after they upload the invoice if the data was actually matching. Now, very important caveat here is that these matching details and these rules are defined by the bank that provides risk mitigation. And those are drafted here, like if I log in as one of the banks, those are drafted here under programs, whereby the buyer's bank, because they also bear the risk, they can create programs and they can invite buyers and suppliers to participate on that program. So depending on the risk appetite and also the credit profile of the corporates who are involved in a payment commitment transaction, the bank can set as many programs as they wish, can invite different corporates to different programs, and the bank here has a way to actually define what are the matching criteria, or what are the rules according to which they will issue a payment commitment for the supplier at the very end. And you can see, for example, that these are some of the matching criteria that the bank has actually set in our example here. And this can be very sophisticated, like you can do sophisticated matching rules. And this is also where the power of Marco Polo actually lies in terms of like connecting the data with each other. And going back now to the invoice, the one that had a full match, this will now trigger the both banks to perform what we call IPU checks. I'm not showing that process again because of the lack of time. And maybe if I can get 1 more minute to show to you a case of a mismatch, like being logged in again here as the supplier. I will open an invoice that did not have a match, namely this one here. If the supplier uploads an invoice that does not fully match according to the rules defined by the program creator, like the buyer's bank, they can see immediately right away what actually did not match. And we can see here that the goods description in the invoice did not match the goods description in the purchase order. And they have the chance to either correct the invoice on the spot, giving a lot of efficiency to the supplier, or file the mismatch by the help of a pre-match task. For example, this will happen in the cases where there is just a slight mismatch, like maybe like a spelling mistake, but not a very relevant or like system relevant mismatch. And the buyer will then have the possibility to accept the mismatch according to a mismatch acceptance task. There is also the possibility for the buyer to amend the purchase order, and then a contingent IPU amendment task is actually triggered here. So actually there are a lot of cool functionalities, and I'm just sorry that I cannot show to you the entire flow end to end, but I do hope that you got some of the idea here, and like are able to understand how somehow like what the benefits of this payment commitment solution actually compared to a more traditional letter of credit process are. And of course, I'd be very happy to show to you like an end-to-end flow demo, like step by step, slowly. Just reach out to us and we'll be happy to support. So back to you, Altari, now, I think.
Colleagues, I think we all understand that this is just a teaser. Yeah. Why is this a teaser? Because we offer something to you, and Altari, I would kindly ask you to take over the control again, yeah, because if you're interested, yeah, in learning more, yeah, and for sure what Ationa now showed you is not sufficient to give you somehow the full view into what Marco Polo can do, yeah. And it was a teaser, yeah, and we did it on purpose like that, yeah, that you just see what actually the system could do. But if you want to learn more, yeah, then what we offer you is a free workshop or a free demo, yeah, and even if you can bring a corporate client, yeah, a free test transaction together with RBI in July, yeah. So if you're interested, then please let me or Atari know, yeah, because we would be very happy to somehow show you more details of Marco Polo, yeah, and also to do a test transaction with you and the corporate, yeah. Please let us know until the 19th of June in case you have any interest to get a deeper insight into Marco Polo. Altari, is there anything you would like to add here?
Yes, one more thing. So I think it was a very nice webinar, and I've seen a lot of questions. I think if you want to learn more about Marco Polo, and if you have questions about how to join, what are fees, anything, we can offer many different ways of doing maybe a workshop or a demo. So that first step is actually very important. So please reach out to us. Also, if you just have feedback, so that would be very appreciated if you contact us with any feedback. And then, yeah, I mean, I would really be looking forward to welcome more banks and corporates to actually test with us. And because I'm a strong believer in actually seeing a live demo and actually testing the demo live and not be looking at slide decks all the time. So please reach out to us. That hands-on experience on a new digital way of doing business will be actually a very exciting experience for you and your colleagues.
Yeah, I understand that the questions that you had were answered by Altari and also Artiona during the webinar. So Altari and Artiona, thanks a lot for that. Yeah, I don't think we have any time left for questions. So I would like to conclude today's webinar. I would like to thank the panelists and also all the colleagues behind the scenes, Herbert and Raphael, for organizing the webinar. As usual, we will share a recording of the webinar with you, and I would kindly ask you also to share this recording with your corporate colleagues, yeah, because in the end, this is a platform that is designed for corporates, yeah, and your corporate relationship managers may be quite interested in learning more, and also to have this live demo and potentially a free test transaction with RBI. I sincerely hope you liked our webinar. Please don't hesitate to give us feedback and to let us know what we should improve for the next time. And again, as similar to our last webinars, I would like to thank you for your interest and wish you all the best and stay healthy. All the best. Thank you. Bye.
Thank you very much, Martina. Have a
Bye.
good day, everyone. Bye-bye.